Hi, this is Acme with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 9th of June, starting off with the FTSE 100 where it's been a dead week really between the 50 and 200-day moving averages, the 200-day line around 75.20 and the 50-day line 77.20, so really waiting for an end-of-day close outside those parameters. On the downside, probably not expecting that support line there from late September, early October to break at 74.70, but obviously stranger things have happened. If we do break that, then it's probably into the 73, 7400 area now, not 72, 7300 as we were looking at before. But while the RSI is below neutral 50 at 44, there is a risk of a test of the March low area, although, as I said, we're not really looking for that at the moment. 74.70, the favoured support area. And really, with the 50 and 200-day lines both rising, it does seem as though this is a relatively stable market. Moving on to the DAX, which has always, well, in the recent past, has outshone the FTSE. Here we're well above the 50-day line. That's rising well. We've basically held the gap from last Thursday of 15,800. And above that, we're looking for a break of 16,000 to lead higher up towards the top of that rising trend channel from back in September as high as 17,000 by the end of next month. But the key here really is that it seems that the downside is pretty limited, set 15,700 the worst. One would expect, especially while the RSI remains above neutral 50, it's 52 at the moment. On to the Dow, and there's only one thing we're really waiting for, and that's a potential break of the main April resistance line there from last year. 34,000 is the key level there. Nice U-shaped bull flag, actually, over the last week, well, the start of June. Nice bounce for the RSI above the neutral 50 level, so this looks like it is it in terms of breaking that line, which would be quite a coup. Initial target there at that February resistance line there, 34,700, big picture target, up to 37,000 over the course of the summer. A bit early to say exactly when that would be, hopefully be by the end of next month. 50-day line at 33,400, and that's the support that we're thinking of at the moment, not really expecting this market to break below that over the near term, given the work that is being done and the test of the 200-day line that we had at the end of last month. Moving along to Bitcoin, which has been pummeled by the authorities, obviously still trying to kill this market in favor of the fiat area. Here we've got the market basically trading either side of the old March support, 26,700. The good news is that we didn't have to go down to 25,000, which was the old August to February support. We have stayed above that. But really, if you're looking for an upside trigger, it would be a break of the resistance line there from from April, in fact, to 27,500, or 27,400, in fact, and the 50-day moving average, and then that would hopefully then take us up towards the 30,000 plus area. Best case scenario at the moment, 35,000 by the end of the next month. And maybe that's possible, given the way that this market seems to be withstanding the authorities on at the door for many of the players there. Moving along to the stocks, and actually just too many to choose from, and it would take all day to try and filter them down, so I've just got a big selection, so apologies for that. Starting off with Asos, where we've gone back down after the fake bid story that we had last week in the press. Interesting here that one would probably imagine that the bull trap there at the beginning of the week is just a way of flushing out weak hands. There's a resistance line there from last month around £3.60, so that's really the level to break now. We failed at that after that fake news at the beginning of the week, and so that does look as though that's a valid trigger level, £3.60, and then above that we'd then be targeting £4, but below 360, still the risk of further lows, perhaps even as low as the line I'm about to draw, which is heading towards, let's say the £3 level, maybe by the end of this month. Moving along to another stock which has obviously been slightly embattled over the recent past, Amigo. Here you can see that we had a bit of a flash in the pan move there up to that resistance line there from March. That line is there at 0.95, and but that would have to break really for us to then be looking towards a very unlikely move up to 1.7 pence in the top of the gap down that we had in March. Otherwise, I think one would suspect that below a penny we still are in big trouble and may have to retest the 50-day moving average area around 0.3. But it's 0.3 to a penny at the moment, the trading range. And it'll be interesting to see whether the market can close above the May peak there at 0.75. That would give an indication that we're heading higher rather than lower. But the unfilled gap to the upside today, pretty impressive for a stock in that position. On to Alchemy, and here the shares breaking the 50-day moving average. They've done that before and failed, but probably the key here will be to break above the 200-day line at £2. Above that, we're looking for that resistance line from December at £2.50, and we remain positive about the shares while they're above initial June resistance around £1.77. The other development today is that we've got the RSI back above neutral 50, so there is the chance of a reasonable move to the upside. On to a stock which has done us proud, even though it's changed its name, a bit like David Bowie over the last week. Here we had that what I describe as a beautiful bull flag against a rising 200-day moving average. We've broken out of that around 8.25 pence. We're now 9.75, and we've gapped up today. Top of that broadening triangle now promising as high as 14 pence by the end of, probably by the end of this month. I was going to say by the end of next month, but the way things are going, it looks as though it could actually be by the end of this month. As I said, especially while we're above the 8.25 pence level. Moving on to a stock which I haven't looked at for a long time. Asiamet Resources seems to be looking a little bit more positive now. We've got a rising 50-day line. We're just touching the 200-day moving average at 1.15. Above that, we're looking to try and break that 1.25 pence resistance line from January and give ourselves a 1.5 pence target by the end of next month as a best case scenario. But obviously, the more days we spent above that rising 50-day line at 1.1 pence, the better it is. And bullish divergence line there as well from back in March, which also helps the momentum. Stock which doesn't get much airplay apart from here is C4X, and here we're just trying to break the 200-day line. We did that back in November. We haven't really been above the 200-day line for a long time, back at the beginning of the year, last year really, and above that at 18.5 or 18.4 pence, looking for 24 pence by the end of next month at the top of that broadening triangle from back in January. Moving along to another improving situation, Capex. Here, probably not for widows and orphans, but we have broken the back above the top of that, the floor of that May gap there around 1.45 pence. Above that on an end-of-day close basis. Initial target 1.7 at the 50-day moving average. Best case scenario at the moment up to fill that gap at 2.2 pence by the end of next month, although I suppose that would be quite a big ask. We also want to see whether the shares can get good support above the old broken support there at 1.6 pence. So ideally an end-of-day close above that. April low by the end of the week, i.e. today, would be helpful. Moving along to a stock which I think in terms of degree of difficulty was one of the more difficult stocks to call, but we had an unfilled gap to the upside, also one back in May as well, which actually was filled, but shares been gapping up quite well on e-Therapeutics, and the 26 pence or 25 pence target we were looking for looks as though it could be achieved over the next week or two, especially if we put in good time above the 20 pence level, that late May spike. Moving along to another stock which has delivered on the upside. Here with GCM Resources, we had an initial target here at 4 pence. The next one at 6 pence, which has nearly been hit, and looking for above 6 pence as high as 8.5 pence by the end of next month. But the key there is holding above 4 pence. Green Rock is next, and here it's been a reasonable week. The shares with a V-shaped bull flag there want to see an end-of-day close above that May resistance at 5.7 pence, let's call it, and above that looking for 7.5 pence by the end of next month. 50 and 200-day moving averages both rising, which suggests we're going into a golden cross, and that tends to be the strongest point in the cycle. The run-up to that tends to be that. On to Itsarm, and here another very difficult sort of situation in the mould of Amigo, but what's interesting here is that the shares have managed to break above the 50-day moving average just now, 0.39 pence. Above the 50-day line, we're looking for a resistance line target at 0.6 pence, maybe even if we then fade after that. Best case scenario would be up to as high as a penny by the end of next month. But obviously, this is a very volatile situation, and most of the spikes just tend to be sold off basically the next day if you look back on that. So the key here is holding above the 50-day line. We're suggesting earlier in the week that Jubilee Metals may be due for a proper turn this time, and that seems to be panning out. Unfilled gap to the upside. In fact, we've had two of them this week, so that's pretty impressive. Target here now up to 10.5 pence by the end of this month, and maybe up to 13 pence by the end of next month, while we remain above the 50-day moving average at 8.1 pence. On to Codal, which again was another stock where it seemed as though the shares were reviving, and they've done that. Bear trap rebound from below a sharply rising 50-day moving average. Broken a line of resistance there at 0.72, and above that, looking for as high as 1.2 pence at the high at the top of that rising trend channel from October last year, and hopefully we could hit that as soon as the end of next month. The more time above 0.7 pence in the 50-day line, the better it is for Kodal. Requested stock now, one which is a bit of a head scratcher, Reabold Resources. The shares obviously undervalued compared to sister company, let's call it Union Jack, and even a peer group, a peer stock like Prospects. But here we've got a situation where we need to break 0.15 sideways price action at the moment. Very, very oversold, but still not getting that momentum. But above 0.15, then there would be the chance of a recovery and getting back into the mid or upper teens there on that situation. On to Supply Me Capital, where I suggested that the shares have gone up and stayed up, and that is quite impressive. The main thing was to stay above the initial May resistance at 0.12. That's what the shares have done for the start of June, which is pretty impressive, and we're still looking for 0.19 or 0.2 pence in terms of the upside, hopefully as soon as the end of this month. If you're a fan of the shares and looking for greater glories, which after all the wars that we've been through on this situation, maybe some would be looking for a big upside. 0.25 is possible at the January 2022 resistance line if we can break and hold above 0.2. But the key here is holding above 0.12, and so far the shares have done that quite well. On to another stock which has been in a sort of a Reabold type mode, not really moving at all. We've got Jubilee Metals, which does finally seem to be kicking in with some interest there near the lows, 22 pence, 21 to 22 pence low there. We did actually gap up in November, and we've held that gap, which obviously has some meaning if you're a technical person. 26 pence, the initial target here, maybe by the end of this month, and then over the course of the summer, still got the chance of a move up to the August 2022 resistance line at 35 pence. Key here is we are cautious to wait for a break of the 200-day line at 24.5 pence. Just a couple of shares to go now. First is Tirupati, which finally is nudging the 40 pence area. 38 pence was really the break level that we were looking at, so 39 is, I suppose, good enough. Nice rising 50-day moving average. We've had good time this month above the 200-day line at 35 pence. And really a weekly close above 38, and we could finally be on our way to the mid-50s, which is the top of that broadening triangle from back in August last year. Finishing off with Ura Holdings, which has been nudging up. I think the main point here with this stock is that we're holding above the peaks that the share had at 2.6 pence. The longer the shares stay above at 2.6 pence, the more we're confident we'll hit that 4 pence rising trend channel top by the end of this month, and maybe up to 5.5 pence plus by the end of next month. But the key, as I said, holding 2.6 pence, which looks as though that will happen, especially with the 50 and 200-day moving averages both rising. That's it for me in this marathon session. More updates over the weekend.